Welcome back to Bloomberg West. I'm Emily Chang. Tim Armstrong got the job of running AOL after what he calls one of the worst mergers in history. That was AOL Time Warner. He's now almost 3 years into a massive turnaround effort, and ad revenue is up. Traffic has stopped declining so fast, but the stock is still way down. I sat down with Armstrong and asked him what specific goals he set for the future, including mobile.
Mobile's an area where I said this year we're going to invest in the consumer experience for mobile, and we're going to bring monetization behind the consumer experience. We're now focused on the monetization of mobile. We just started to do it a couple months ago. We just integrated mobile into our ad server in the last 3 weeks. So I think we can grow mobile double digits from a revenue standpoint, and I would hope to get to double-digit revenue in mobile as a company at some point, in the near future. And that's a big task, but I think we're going to do it. Video is a big investment for us, and then display advertising with Project Devil is a big investment. So, we're going to continue to invest very, very strongly against those areas.
Now, Laura Martin of Needham said, "We loved him. We think he can get it done, but we think the key to the stock price is when Patch hits profitability." This is your service that sort of aims to replace local newspaper coverage, attract local advertising. When will Patch be profitable?
Patch basically will be profitable on kind of a rolling thunder basis, and we've,
What does that mean?
Rolling thunder means over the course of time, we've gone from 0 patches to over 880 patches, and we put them out kind of one at a time. So you're going to see patches get profitable probably in some kind of date and time in relation to when we rolled them out. And, patch was another area we focused on the consumer traffic side. So we've gone from 0 to over 10 million unique visitors on patch every month.
So would you say it's a matter of months, a year,
I think it's going to be a few years.
AOL is down year to date more than 40%. Yahoo is down about 3%. Google slightly up. Wall Street is an impatient mistress. Right. Can you get this done as a public company?
Yeah, as a public company or a private company, for me, what really matters is, are we making progress against the key items we're doing? Because whether you are public or private as a company, private investors are the same as public investors. They want to see return on their investment, and return on investment comes from very clear deliverables and very clear measurement of how you're doing. So I think we can get it done as a public company, and that's what we're focused on, and we're happy to do it as a public company. I mean, it's noisy, but look, if you don't like noise and you don't want to work hard, I don't know what you're going to do in life, so it's okay with me.
There's lots of private equity interest in Yahoo, of course. Might there be similar interest in AOL? Would that make sense?
I think I wouldn't comment on that specifically, not because people may or may not be interested, but that's not my focus and not what I've been spending, time on. But look, I think private equity people, they're in the business of doing deals. So if there's deals to be done, they'll be there. I'm in the business of creating great consumer products and great advertising, and that's what I focus my time on.
You've made it clear you're not interested in buying any of Yahoo's assets. Why not?
Well, first, one is we have such a clear strategy and such a clear execution plan that anything that's going to distract us from doing that, I think, is something we don't want to spend time on. That being said, my job also as CEO is I have to operate the company, work with our management team and all the team members at AOL. I also have to keep my eyes on what goes on in the marketplace. And I think from the marketplace standpoint, I'm watching very closely what's happening with all the other internet companies all the time, including Yahoo. And I think I've publicly said that our main interest and main focus is on operating AOL, and that's the truth, and that's what we're spending our majority of time on.
Now, talking about some of the acquisitions you've made, the Huffington Post was a big one. How do you show a competitive return on that investment, and how is the integration going?
Sure. So we bought the Huffington Post, during Q1. Of this year. We integrated almost immediately. It was probably the largest, fastest integration I've seen in the internet space that I've ever worked on. And I think there's two measurements that we're looking at closely. One is traffic growth. The second one is how we're doing on monetization of that property. And I think on the traffic growth side, the traffic's up roughly 50% since we acquired it, number one. And number two is on the monetization front, we've been rolling out more and more products and services on the Huffington Post. We've launched 20 new sections of Huffington Post. We've launched multiple new countries. So I'd expect monetization to continue to follow consumer usage, which we're seeing.
How are some of the integrations of the bigger personalities working, like Arianna Huffington? Wasn't Michael Arrington's ouster in part in relation to this sort of
these big personalities all coming together?
Yeah, I think, again, going back to the theater that people love to think that that's what drives these outcomes. But really, in essence, when you boil down any of the situations we've dealt with in any integrations, you have strong entrepreneurs who have really strong visions about what they want to do. I think Michael had a very strong vision for having a venture capital fund, Crunch Fund, which we invested in and was partners with him in that fund. And I think from that standpoint, the outcomes of Michael being an investor and focusing on that, Arianna focusing on content, and then really making sure that TechCrunch continues to grow and is a strong brand. I mean, TechCrunch is both up in traffic and profitability substantially since we acquired it. So I'd expect Michael to be a successful investor, Arianna to be successful at content, and TechCrunch to be successful as a property. So outside of the noise around that situation, I'm hoping that we're all going to get to an outcome that is successful.
Speaking of some of that noise, a lot of other senior writers have left TechCrunch as well. Paul Carr, a contributor, recently tweeted, "It's hard to watch something you love being killed like this." I mean, how confident are you that TechCrunch can still be a leader without some of these strong voices that made TechCrunch attractive enough for you to buy it?
Yeah, I think TechCrunch as a property is a big brand. And I think TechCrunch was built as a brand by really significant talent. And I think our job is to make sure significant talent is at TechCrunch and continues to do it. I think Eric Schoenfeld, who's there and leading it now, has done a really good job of replacing that talent. And then also, I think we have some aggressive areas we'd like to move into in the tech space overall.
In addition to Arrington, there has been other senior turnover. Brad Garlinghouse, who's very well respected out here in Silicon Valley. What has changed internally? Why are these kinds of things happening?
Yes, I think one is Brad is a really strong executive and somebody that I've enjoyed working with a lot. I also, from the standpoint of the company standpoint, we're in the middle right now, and I'm very transparent with employees. We're doing weekly calls right now with our employees about what the structure is for 2012. And part of that structure was moving part of Brad's group together to form AOL Services as a unified group of services for AOL consumers. So I think in the transition period of that process, which started a couple months ago, the outcome with Brad leaving the company and us restructuring, what the company looks like, not restructuring from a layoff standpoint, restructuring what the company's focused on, I think we'll remain very strong employer in Silicon Valley. Brad will go off to do wonderful things as he already has done in Silicon Valley. And I think from an outcome standpoint, AOL, we're going to end up as a very strong company around some very core services that are important to us.
That was AOL CEO Tim Armstrong. As for how long the AOL turnaround could take, he said he wants everything to go faster, but he has to be flexible, and he does believe there is, quote, a strong possibility AOL will become a growth company once again.